My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make a little money. My job is to entertain and explain. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Maybe, just maybe, we're finally having that long-awaited correction. And if that's true, sell. I say bring it on. I think the new year's been way too facile versus what's happening in the world. So maybe it is time for a little pullback. Not big, little. Today's action, Dow falling 232 points, S&P losing 0.37%, NASDAQ declining 0.19%. Feels like a good start. Although the NASDAQ's furious rally into the close shows there's still a ton of buying power out there. While I am not a bear, we have too many stocks that have gone parabolic, meaning they're straight up, and they're going straight up on nothing. There's no reason why these companies have stocks that make software, for instance, that help you sell product, should be able to rally this relentlessly and endlessly. They just keep rising as one analyst after another raises their price targets, and really nothing more. We see the same behavior for anything that measures or analyzes data. Nothing's happened to warrant that rally. I could even argue that cybersecurity needs to calm down. We own some of these stocks from our Chapel Trust. I don't want to lose them. I don't want them to lose their mojo. But we made some sales because they're simply up too much for the same reason over and over and over again. Multiple expansion. That's right. They do not make a solid rally. You can't have momentum and multiple drive stocks. But that's what's driving things. See, look, I don't want to see an Apple stock go down or Tesla be upended. I'm a huge believer in the Magnificent Seven, but they too need to rest up unless they have actual fresh good news to report. I mean, some do. Think NVIDIA, where pricing is held up while demand is continues to rise. And most importantly, they worked with the Commerce Department to create chips that China's using for gaming to protect the market. Remember, we thought they were going to lose that China market? I also like the stock of Microsoft because it's got this new revenue stream from its Copilot artificial intelligence helper, and apparently it's doing quite well. I also think that ServiceNow's winning a huge number of clients who want to figure out how to integrate artificial intelligence into their day-to-day business. That stock is a buy. But man, there are plenty of companies out there, I mean, that are moving aggressively into AI who really have no idea what they're doing, and many others say they're moving into AI, but I think they may just be using souped-up spreadsheets for all I know. No matter what, you just can't have the same stocks go up and up and up on the same old news. And as I see it, that's what's happening. Momentum and multiple expansion. Any stock that's going parabolic is a candidate sell to decline here. I think that most of this market's recent rally stems from Fed's decision to pause the rate hikes because of a belief that the economy is cooling. But we need to take a breath on this one, too. As I'll detail later in the show, since the pivot, nothing's happened to indicate that anything's getting weaker in price. The Fed wants to bring us past the tipping point where prices start coming down. Should we ignore what Fed Governor Waller said today about measured rate cuts? Look, when we left here Friday, those who follow this stuff closely, and a lot of people do, were signaling that Waller's going to be the new resident dove. That'll explain why rate cuts are so important. He didn't. I think he actually did the opposite. How can I expect a series of rate cuts when even the Fed's resident dove, the one who kicked off this whole peak interest narrative in the fall, doesn't sound like he wants to go that far? It's not like we're getting employment reports that show massive layoffs or lower wages. We just have few layoffs and slower wage growth. I know it's not in keeping with the soft landing thesis that I favor, but we may need to see some wage degradation to prevent inflation from reigniting when there are cuts. I mean, that's Jay Powell's goal. He needs to truly beat inflation before he can start putting through even one rate cut. Listen, I'm not in the camp that says we're in a perilous, dangerous time, a la Jamie Dimon from J.P. Morgan, but I do believe that there's more risk of an oil rally here. Wall Street's been totally dismissive of the armed conflict in the Middle East, even as the shipping's been shut down in the Red Sea. Yet at the same time, we know from Carly Garner, our resident commodity analyst, that this is seasonally a very positive time for oil, and she thinks it's found a floor, and there's not much of a ceiling until maybe we get close to $100 a barrel. Hey, we're talking about $20 from here. Wow. Unfortunately, and that's for one kind, 25 for the West Texas. Unfortunately, higher oil prices intrude way too much into the pricing of everything that we buy. And since the Fed's goal is price stability, it's the last thing you want to see. I just don't want to ignore it. like everyone else seems to be doing, because this Red Sea conflict, I don't know about you, it seems to get worse every day. What else? I'm in favor of cryptocurrencies. I think everyone has a right to own them, but I am not in favor of rank speculation or cheerleading for something that went up largely because there was endless talk about an exchange-traded product that would be approved. We got to sell the news reaction on Friday, then stabilize again today. I figure probably stabilize for a couple of days. But meanwhile, you can't have the following happen that really steams me. You have apostles like Cathie Wood talking about Bitcoin soaring 3,000% even from here. Now, I hear things like that, and I want to say, even if you believe it's going to go much higher, please be responsible about it. Don't encourage that kind of rank speculation on this one, too. Historically, it's cost people a great deal of money to do that. Cathie Wood can get away with it because it's just so outrageous. The price is so high, the time frame is so far out, 2030, that it can make people feel sanguine about buying it right now, right here, even after a massive run. When you get these targets like this, they make people feel very comfortable about buying it. They kind of lull them into it. Because even if it goes down in the near term, well, people think that they'll be eventually all right. They're so comfortable buying it. What do? And this is the inflationary part. They borrow money to buy more, and then they actually do get hurt if the story doesn't pan out, which is often, frankly, the case. Why doesn't anyone call Cathie Wood out on this? Is it really just fine that she does this kind of ridiculous hype, but no one else does? Does she have a license to hurt people simply because she believes in this stuff? What's up next? Say a 5,000 target in 2032? I mean, why not? She'll get away with it. There's no accountability when it comes to her projections. Now that there are some segments in this market that are acting reasonably, and I like that, sellers of the financials recognize that those stocks need kind of a, let's say, a rest, not a retest, but a rest. They're coming down at a reasonable pace, and I think that they are resetting in a way that I like. I believe we may have started to see some reversals in healthcare after the hype from last week's JP Morgan Healthcare Conference. Again, I like some of these companies, but I feel it's important that their stocks come down before you buy them. You'll hear more about that in a moment. Nothing wrong with waiting for a better pitch. Hey, just ask the people who paid $176 for JP Morgan after the best quarter of the bunch and now find themselves having serious indigestion with the stock down to 168. That said, I think JP Morgan can now be bought after this decline. Hey, by the way, same with Morgan Stanley after we no doubt get some downgrades tomorrow because a lot of people sold it today thinking that there's not enough leverage when it comes to the wealth management business. Naturally, oil and gas make a lot more sense if you, like me, believe that prices are going to be on the rise. I'm warming up to aerospace and defense because analysts have hammered that group endlessly since the Boeing fiasco began. Even as I see no real end to the hostilities in the Middle East or Ukraine, I don't know how many customers Boeing can really lose this time. I suspect none. I mean, what else are they going to do? Go to Airbus with that waiting list? But the bottom line, I say let this market come in. It deserves a chance to correct, even as some parts of it already have. Let's take questions. Let's go to Sheila in Tennessee. Sheila.
Hi, Jim. Booyah. How are you?
Booyah, Sheila. I'm good. How are you?
I'm fabulous, thank you. I'm calling you today about Blackstone. I'd like your insights on whether I should hold it because it seems to be taking a dip like a lot of stocks. Still got a decent profit in it, but I don't want to ride that profit all the way down.
Right.
And should I sell it and invest in something else? I'm thinking about maybe short-term 6 to 12-month treasuries.
You're not going to get hurt doing that. I would prefer you to sell only a third of it. Keep 2/3 and sell 1/3, Sheila. I would feel much more comfortable after this run. Let's go to Jerry in Missouri. Jerry.
Hey, Jim. Thanks for taking my call.
Of course, Jerry. We just were out in Missouri. I loved it. What's happening?
Well, last week you interviewed the CEO of the rental car giant. They had announced that they were liquidating a large portion of their electric vehicles. The stock is now down to the level it was when it emerged from bankruptcy a couple of years ago. Do you see this as a buying opportunity, or is
Yes, I do. Actually, what they announced last week was that the cash flow was improving, not getting worse. I thought this was crazy. I think Steve Scher's doing a good job in a tough environment. At $8, I want you to, yes, pull the trigger. Let's go to Josh in Florida. Josh.
Hey, Jim, booyah. I'm calling about Norwegian Cruise Lines. I asked you about a year and a half ago if I should buy it. You said no at the time. Meanwhile, bookings are way up. Oil prices have come down a little bit. Wondering if you think it's a buy now.
I prefer Royal Caribbean. They seem like Royal Caribbean can do no wrong in the eyes of the stock market. All it does is go higher in good days and bad. RCL is the one I think has the most, what's the technical term for it? Mojo. Okay, let's think about this, all right? I think it's time we let the market come in before we do any more buying. It deserves a chance to correct. I told you the sectors that maybe have already corrected, they're interesting to me, and some have others have a bit of a way down to go. Well, Mad Money tonight, after being out in sub-zero weather in Kansas City, got me thinking, is it time to maybe start thinking about the natural gas landscape now that the stocks have cratered? I'm updating my thesis on charitable trust named Coterra and seeing where it fits in. Then it was a big weekend for football, despite, yes, an Eagles loss, and my team, the Chiefs, won. I see one name in the space that has pulled back that I think could capitalize on the increased eyeballs on the sport, and I'll reveal what it is. And Goldman Sachs is out with a note saying that money managers are overweight healthcare stocks. Where do I come down? I'll give you my thesis on the cohort, and I'm going to share 5 big ideas that I think are... Buy. You got it. I like these for the new year. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.